Hey guys, welcome back to the channel, and we have had another slight down day. Just this keep choking out. We actually gapped down here today on the 15-minute chart and waved a bit, found a bottom around 11 a.m, then chopped back up and just kind of chopped around again today. Same with the Qs if you look on this. And if you remember me saying yesterday, I came in today 100% net short, had a pretty good day. But stay to the end of this video, I'll let you know how I'm positioned going forward. So let's just go have a look at the data. So overall pretty bearish except for energy. Energy had a good day. We'll get to that in a bit. Why? Tech did come off. We had Amazon off 2%. Aerospace and defense held up. Same with the railroads and basic materials and a little bit of industrials. But overall healthcare, cyclicals was off, and especially utilities as well, and defensive stocks. Moving on to economic data we had out today. So we had PMIs come in worse than expected and below 50. So that indicates manufacturing PMIs and the ISM. That indicates that manufacturing is contracting. So that's something you'd see if we were going towards a recession. And also that's inflationary, because if PMIs and employment are contracting, that's going to continue to choke supply. And for the moment, consumers still buying and healthy, although it is with credit card, as the consumers, low savings rate, high credit card debt at the moment. And crude oil stocks came in a lot worse than expected, so that caused oil and commodities to spike as well. Still got the fear and greed, slightly in greed at 56 level here, although that is tracking down. A week ago we were at 60, so that is slowly moving down. And the dark pool index continues to roll over. And something one of the subscribers pointed out to me, which is worth mentioning and could be helping to hold this market, is we do have big put walls in the SPY. So we're looking at the March 3rd Friday regular month expiry date here. We've got max pain at 400, which acts as a slight magnet, slightly above the current price of 395. So that's where market makers, dealers will make their maximum profits if we end at 400. And we can see here at 394 we've got over 100,000 contracts, and at 390 we've got 165,000 contracts, and total puts contracts outstanding 3.3 million, which is big. So there is some big put walls there. Moving on, rates have jumped pretty good today, which I'm going to get into in a bit, and the market's now pricing in 27% chance of a 50 basis point hike. And we had some Fed officials come out today and say they think that we should be going stronger and harder on rates and harder for longer, and inflation's not done with yet. So that is bullish for rates and bearish for risk equity sentiment. In news, mortgage demand from home buyers drops to 28-year low. So again, there is big, dark, stormy clouds on the real estate and home builders market. Mortgage demand fell for the third straight week. Mortgage applications to buy a home dropped 6% last week from the previous week. So these higher rates that we've seen over the last couple of weeks, when people are going to talk to their mortgage broker or their bank, they're getting a little surprise of what they'd be hoping for a month or so ago is now not possible. So this is having an immediate effect on demand for mortgages and homes. So I still am a believer that home builders are a bit disconnected here from the fundamentals. Moving forward, we've got Tesla Day, Investor Day. Their part 3 is underway as we speak, and Tesla, we'll get to it in a bit when we look at the stock, but we can see here this is currently live on YouTube.
At Tesla, it's not good enough. If we're going to scale the way we
I don't think Elon's come out yet.
Manufacturing again. As part of the master plan, we have to make another step change in cost.
So it'll be interesting to see what the reaction is to Tesla in the after hours as this goes on, and tomorrow as well. Also had famed hedge fund manager David Einhorn on today, and he said investors should be bearish on stocks and bullish on inflation. He believes inflation and interest rates could surprise to the upside, and he had a really good year last year, up 36%. And he goes on to say that I think that both long and short-term rates are headed higher, and probably higher than what people are expecting. The Fed does want stock prices lower. They've made that clear. I think it would be better if they cared less about the stock market in either direction. He also said he is still short some bubble names, but he does have a lot of value stocks in his portfolio as well, which I can see the same thing. There's a lot of good old economy Buffett style stocks that are actually paying good dividend yields and have healthy balance sheets and low valuations, but there's still a lot of stocks left over from the 21 bubble that still have yet to come down to what would be considered a long-term norm. Okay, so back to the charts. Here we're looking at the NASDAQ, and we've just, when we gapped down here on the 24th, the NASDAQ couldn't take out that low, although I think the SPY 9338 did, just by marginally. But again, we're just sitting around in this small little doji, haven't had a full-bodied candle day for a while, just choking here, but we'll come back to that. So NASDAQ was off the most today, actually had Dow, mids and smalls pop a little bit. Internationals have actually held on as well. Had Nikkei up 50 basis points. China up. Their PMIs actually came in good and expanding, as which is to be expected as they're reopening their economy. VIX, much of the same thing, just still kind of just sitting flat, not doing much, although we are still holding that 20 handle on the VIX. Again, realized volatility, just sitting really flat. Put calls had a jump today, a bit more puts being bought out there. Still got breadth rolling over, only 40% of stocks above their 50-day average, 53% above their 200-day average and turning down. Breadth, amount of stocks making new highs is just not there. Spreads, growth, cyclical, high beta sectors holding on pretty good. Consolidating as well, while we did have growth versus value roll over a little bit today. And NASDAQ, smalls are holding up really well and actually looking to trade at the top of their range against large. Yield curve sitting right down there at all-time lows. High yield versus treasuries came off today, and look at this on the 2-year. We got up to 4.9 today, and that's just a motorboat. Walk the line, parabolic uptrend. 10-year as well is broken out, and look at September Fed Fund futures. Market pricing in 5.45%. We got to 5.49%. If you've got a mortgage, like a variable rate mortgage tied to the current interest rate, I'm sorry to report that your repayments will be going up soon, if not already. This bond market is just marching higher with conviction, and this doesn't look like it's putting in a top anytime soon. It's just no, not even shallow pullback, you could call it. It's just gone parabolic here on rates. So that is not good for the mortgage and home building market, and the consumer who's already getting to record levels of credit card debt and record levels of low savings rate that's been depleted since COVID. That's storm clouds on the horizon for equity markets. Treasuries came off today as you'd expect, and high yield, which we've been watching as one of our biggest risk sentiment indicators, has gapped down and held below its trend line. So that's the one we're really watching. Dollar pulled back a little bit today, still consolidating at the top of its range. Moving on to Bitcoin, it's actually just holding there a little bit. Commodity complex did well today. So we saw those oil stocks came in a lot lower than expected, which is proving to be inflationary for oil, and so that has helped the energy stocks outperform today really well. Over to stock sectors, another mixed day. And look at this, utilities off 1.65%. And you remember me saying yesterday, this looks like it's trending down hard. And I suspect we're looking at, you got a dividend yield of 3.1% on utilities. And now you look at rates, so you can get a much safer rate in the bonds. And utilities, don't offer much in terms of capital growth. So I'd say this is a bit of flight from these typically high-yielding sectors into the safety of bonds, but this is still not good for overall the stock market when you see that even the defensive sectors selling off. hard. We also had real estate off 1.5% today, as you'd expect. Home builders were off a little bit, but consolidating here on a bit of a bear flag pattern. I'm still bearish on this sector. I still have some home builder shorts. Gold had a nice little pop, as did all the energy ones. Retail was off 1.7% today, and as you'd expect with higher rates, that's not good for discretionary spending. And we had the discretionary ETF as well, and ARK was off 2.3% and under its 50 bar as well. Over to meme stocks, popular stocks, BlackRock Barometer trending down here. So this is the insiders and those closest to the stock saying there's not much in terms of funds coming in to BlackRock into the stock market. So they're a huge asset manager. Apple came off a bit today and now under its 50 bar VWAP. Same with Microsoft. Amazon is trading really weak. Google trying to put in a bit of a bottom here on its support. Meta just flat. Nvidia came off 2.2%. If you saw my channel yesterday, I did a deep dive into Nvidia and actually gave it an underperform rating with a target of 141 down here because of its valuation. I mean, this thing has a PE of 133. Now you can look at a whole lot of different valuation things, but the fact is it's trading on a price to earnings ratio of 133. So that's an earnings yield of 0.75% or thereof. We've got climbing rates. You can get a safe 4.5% from the US government, 0.75% on Nvidia, and their sales their earnings were actually down off last year considerably. So that's just such a rich valuation. We're looking at 558 billion market cap. They did 26.9 billion in sales. So what's that? Almost 20 times sales for a huge company. Sure, they're in AI, and that all sounds great, and there's a lot of hype in it at the moment. But in my opinion, this thing's overcooked. It was pretty good risk reward here. On a short, we're still 20% above the 50 bar moving average. Moving on, Netflix looks to have broken what was trying to find support here on this hammer, but just seems to have come off a bit. Tesla, that's what I was watching here. Look, just sitting on this trend line that we've had here, and prices kind of coiling up into this triangle formation here, which could lead it to go one way. I've been saying that this is probably going to pull back. I mean, because we've already bounced over 100%. And Investor Day, this could be the event that marks the pivot in the price. I just wouldn't be surprised to see this have a big down day to tag this 50 bar VWAP, as you've heard me been saying for over a week now. And we've just slid through this trend line, dip bought as it always does. But now look, and after hours, well, the Investor Day is going, we're at 1.8%. And let's just see if Elon's come on yet. No, he hasn't. We'll have a look at that in a bit. Okay, so over to meme stocks. Meme stocks overall today down today, except for Bed Bath and Beyond, just having a little bounce. But overall, we're off. Look at AMC, the day before earnings, up 22%. Now, we just came off another 8% today after coming off 6% yesterday. So once again, just falls over. This thing is just burning through money. It's kept alive by hype. And if they ever do pop, they'll just sell more stock in a secondary. So there's kind of like you capped upside on it. It's kind of pointless. Bed Bath Beyond Meat rolling over after its earnings as well. Had that nice pop on better than expected results and then just sold off. Active today, Snowflake came out with earnings. We're actually short this in our equity long short portfolio. So our clients, we actually manage portfolios for clients. They're enjoying this after hours action in Snowflake as they are short Snowflake, and that's because look at the valuation. On our stock fair value indicator, we've got fair value at $78. We're still almost 100% more than fair value, and once again, this thing just can't stop losing money either. There's 200 million a quarter, and yeah, shorts revenue's growing, but in a high rate environment, we got 50 billion market cap. When you have a company losing money, they rely on financing to stay alive. They rely on investors putting up money. Investors now can get, say, 4.5% from bonds, or they can buy a company losing 200 million a quarter. So this company has debt, and its interest rate repayments are going to increase, and it's just, it's not good for its financing and sentiment towards the stock in an increasing rate environment. So we continue to remain short this stock. Although bucking the trend today, Salesforce up 16% after hours. So that's really, their EPS was surprised 23% on the upside. So that's interesting. There is still some bids out there in the market. It's not all gloom. So overall, back to the market. Just once again, the market cannot seem to have any conviction in either direction here. It's just really kind of choking up. And we are at this somewhat of a support line here on both the indices, and just kinds to be, look at the Dow. The Dow's sitting down there at the bottom of its range. We still have a bit of bearish seasonality coming into the first half of March. That actually turns bullish in the second half of March. So the second half of March is typically a good time for the markets, but we've still got bullish seasonality coming into volatility. Breadth that's rolling over. These rates are just rocketing. I mean, the stock market should be off a lot more, but there's definitely bids in there. And look at high yield as well, looking to be rolling over a bit. But so what I'm speculating is whatever's holding this up, if it's all those puts or something else, buying the dip. If this breaks, it could be like when a dam wall breaks and then all, it just starts to flood kind of thing. So that's kind of what I'm banking on. However, I would not be surprised to see a little bounce here, even if it was at a fake out above this trend line. And you look at this trend line that we've been watching for a long time, that one we watched all the way down, that broke through, it's just coming back down to it now. So will that act as a bit of support? It's kind of at a junction here. But I would not be surprised to see it come up, bounce back up to its 50 bar VWAP and make a 50% retracement of this move, even if we were to then roll over from there. So maybe fake out, catch some bulls, and then roll over hard and fast, and the stock market finally acknowledge what's going on in rates and the economic indicators as well. So I came in today 100% net short, had a pretty good day, but I managed to find a few little longs, and so I've tilted the portfolio 80% net short, just because I think we could bounce off here, but I'm still overall bearish as we go forward towards mid-March. And if the Fed market starts pricing in more chance of a 50% increase in rates, I'll continue to stay net short. So depending on price action, at least till mid-month, the most I'll probably get is towards flat. Can't see myself going net long, but I'm going to remain short for it is here. But I would not be surprised if we get a bounce tomorrow or the next day into the end of the week. Okay, guys, that's all. Thanks very much for watching. I appreciate it. I'd love it if you hit the like and subscribe. That keeps me motivated to keep doing these videos. I hope you're finding some value in them. And I hope to see you again tomorrow afternoon to discuss tomorrow's price action. Thanks again, and see you then.